futures into weakness on Friday afternoon from the small exchange. I want to speak to a specific example in the US dollar, but this is the type of opportunity that creates a potential trade probably every couple of days, as long as you're looking across different asset classes and not just glued to stocks or interest rates or, whatever is your go-to. Just having different products like the small US dollar or small metals or, small oil coming down the line here, having those to be able to monitor, to step outside of your go-to markets, whether it's stocks or what have you, is really intriguing, because on a week like this week, you've got inside movement almost across the board when it comes to equity indices, and across the week when you talk about Monday through today. Not a lot of activity there, but we did see an interesting foreign exchange opportunity here, and I want to zero in on it and hopefully bring an interesting trade going into next week and an interesting strategy to put in your tool belt for the future. Now, it's been 12 months of ups and downs for the US dollar. We had some struggles at the midpoint of 2020 going into the end of the year here, whereby, we're big back and forth traders. We like to look at opportunity from the long and the short side, just depending on where the markets are moving and just trading that price action. Now, when you have a move like we saw in US dollar midway through 2020, where it's essentially just a straight drop down from 160 to 150 with some small slight bounces in between, that can be a tough one. Now, that being said, zeroing in on the last few months here, we have seen some really nice back and forth. And this is what we like to see here, is a market that is higher. It's higher by a couple of bucks, but big rallies and then big sell-offs. And this week, we've seen an especially harsh sell-off from about 148 all the way down to lows yesterday of 146 and change. And this is something that for foreign exchange markets is a decent opportunity. You might say, wow, a sell-off of a couple of bucks. If I'm trading Tesla or GameStop or the S&P 500 or whatever, that doesn't seem so opportunistic. But keep in mind that foreign exchange markets are not as volatile as stocks and commodities and everything else. So this move this week that you're seeing, this decline here, a harsh one at that, pretty much just, I think, 3 or 4 days in a row moving lower in that US dollar. That was a big one. And it caught my eye both from that chart and price action perspective, but also when I put what subscribers to the small exchange get here, 5-day forecast in SFX. We update this every Monday for those subscribers. Check it out, subscribers.thesmallexchange.com. But I put some statistics against it because I want to always check, what I'm seeing on the chart, does it actually coincide with an opportunity on the statistical side? And we saw small US dollar futures spending the greater part of Monday through Thursday through these lows. So what we have here on the 5-day forecast is day 1, 2, 3, 4, and 5, usually coinciding with Monday, Tuesday, Wednesday, Thursday, and Friday, when we kick off the trading week on a Monday, and we send these out on Monday morning. And what we saw was a close on Monday below that 146.96, below the projected range for Monday. And then again on Tuesday, Wednesday, and Thursday, the market closed below these levels every single day there. And that, teamed with that chart, tells me this market's moving, and it's moving outside of its range to the downside. Now, will it get back to 146.38 by Friday? That's the question from my perspective when I'm looking at buying a futures market like the US dollar into such weakness. And so what we see here is a close lower on Thursday than the projected low. Now, will it close below this projected low for the week? We will see what the rest of the day has in order, but I do want to give you a potential opportunity here that gets past. We always talk about in futures 50-50 opportunities. When you go to buy or sell a market, theoretically, you have probably a 50% chance, depending, and it doesn't depend on which side you're on there, because both the long and short side should have that theoretical 50% chance. And so our game is trying to create a statistical edge that's 53% in our favor, 55 or 60% in our favor. So I took a look at this and I crunched some numbers for the last couple of years in the small US dollar. And I said, well, what happens when the small US dollar, US dollar market in general, closes the week below its projected low relative to the way we calculate it in this 5-day forecast, which is a function of realized volatility. So what I do is I just take the movement of this market in the past, and I use that to project prices going into the future. So I said, what happens on a Monday through Friday when on Friday the market closes below that low? What happens that next week? Is there some edge in either selling into that weakness or buying into the weakness? And as you could maybe imagine, hence the name of today's segment, there actually is a good amount of edge buying into that weakness in this SFX market. We've seen going back to 2019, almost 2 full years of data now, that SFX has followed a weak closing through those projected lows with a positive week 65% of the time. That may not seem like much to you if you are a high probability options trader who's selling strangles, iron condors, out of the money call options, out of the money put options that have a theoretical edge of 80% or 85%. But I'll tell you what, 65% relative to the theoretical 50-50, that's a hell of an edge when you're talking about buying futures into weakness. So let me conclude with this. We've had a weak week here in small US dollar. We've seen, going back the last 2 years, that the week following a weak week in SFX, we've seen a positive week 65% of the time. You match that with a futures opportunity that is theoretically 50-50, that's a hell of an edge. And that's something that I'm looking to incorporate consistently. Now, it could be that this coming week is the 35% of the time where this doesn't pan out my way. And that's fine. If I buy the 146.50 in SFX, wherever it is, and next week it goes against me 50 cents or 60 cents or 70 cents, I take off that loser and I move on to the next opportunity and just say, hey, that's the 35% of the time. The next time it comes around, I'm going to go back into it and know that in the long term, I've got that 15 percentage points of edge here. That's totally fine. But when you see an edge like this in the market, you definitely have to look at it.